Hi everyone, welcome to the panel today. Thank you to all of my panelists for joining me, and I will hand over to everyone in a moment to introduce themselves. But just to set the scene for the conversation today, we are going to be talking about digital lenders and looking at some of the disruption that we're starting to see in the mortgage space. What we're seeing in terms of RFI data at the moment is really quite a significant shift around consumer perception of digital in general, but also we're starting to see customers become more comfortable with digital applications for mortgages. So an interesting time to be having this discussion, and really keen to get the thoughts of my panelists. So with me today, we have Nathan from Athena. We have Andrew from Nano.
Hi guys.
Anthony from Tic Toc.
Hi.
And Tim from Yodlee. Welcome everyone. I'll hand over to you all and just let you do a little bit of an introduction before we jump into the panel today. Nathan, why don't we start with you?
Thanks, Kate. Well, great to be on the panel with a great group here today. So Nathan Walsh, co-founder and CEO of Athena Home Loans. So we're a digital lender focused on prime Australian mortgages. We launched to public in early 2019 and have now written just over $3.5 billion of settled loans. And really with a mission to help Australians pay down their home loan faster. So we see this as a category that really needs change and some big opportunities to give a much better deal to consumers.
Lots of noise in the market about Athena at the moment. I saw you guys won a Finny recently as well.
Yeah, so a couple of big awards. So FinTech of the Year, Consumer Lender of the Year in the Finnies, and then the AFR awarded us Most Innovative Company in Australia and New Zealand in finance, and then actually won the overall category as well. So it's been a little bit of celebrations with Athena team over the last week.
Looking forward to discussing it some more. Andrew, do you want to give us a bit of an introduction to yourself as well?
Yeah, sure. Thanks very much. And again, once again, it's really great to be here with the team. So I'm the co-founder and CEO of Nano Home Loans. We're a technology company that operates in the digital lending space. So we think of ourselves as a platform company that runs across multiple different channels. And look, it's great to be here with the panelists because I think we all share the same vision, which is this is going to be, already is and will continue to be the fastest growing category in lending in this marketplace for quite some time. And we happen to be at the right place at the right time. So we're pretty enthusiastic here at Nano.
Looking forward to hearing more about it. Anthony?
Thanks. And I'm the third member of the rising tide that carries all boats. I think that is the transition of digital and home loans. Tic Toc was founded in 2017. We were the first true digital platform, end-to-end home loan fulfillment online. We've settled over $2.5 billion under the Tic Toc brand now, but we've also licensed our platform to a range of industry players, both as a platform as a service. We have two other platforms in the market, Bendigo Express and Aussie. And we also have sold modules of our technologies now to 14 other lenders, not all for mortgages, across both Australia and New Zealand. And they range from reasonably small to the very biggest. So we are a technology company at heart. And basically, we are really, very excited about what the future means for digital fulfillment of customers' financial services needs.
And last but not least, Tim.
Hi, thanks, Kate. Nice to be here. Tim Poskitt, country manager for Yodlee across Australia and New Zealand. For those who don't know, Yodlee are a global data aggregation platform. So working quite closely with a number of lenders and financial wellness organizations to really streamline that onboarding process, and working quite closely with a number of clients, both locally and globally. And obviously leading the charge into CDR. And we've recently become accredited earlier in the year, but now under active status as of the last couple of days. So looking forward to continue the CDR push and journey coming into 2022.
Yeah, really keen to get your thoughts on CDR and how that's going to continue to revolutionise this space within the mortgage industry. But let's start off with a fairly high level question. I'm keen to get your thoughts on just what a good digital application experience looks like. Athena, Nano, Tic Toc, obviously all playing in this space and trying to create that really great customer experience. Keen to get your thoughts on what does that need to look like for a customer? Is speed most important? Is price most important? Is there something else that you see as being really key? And is it different for digital compared to in another channel? Nathan, why don't we start with you on that one?
Yeah, so maybe it's worth almost starting by defining the problem, Kate, and then we can then talk about the components of the solution there. I mean, we're in a $1.9 trillion market where this gap between what many consumers are sitting at, backbook pricing, paying, often tens of thousands of dollars more over the life of the loan about what a competitive rate would look like. And many of these are consumers who would drive extra blocks to get a better deal, filling up the car or switch supermarkets for better components. So I think people just, in many cases, there's things that are driving inertia in category that a digital solution can actually make much better. And so at Athena, we think about the problem as really being, it's about simple, savings, service, and speed. And I think you framed those as trade-offs. I think what you really need to do is actually solve each of those key problems. So in terms of simple, people in many cases have been deterred by what their prior experiences of going through a purchase or a refinance, manual paper-based process, incredibly painful. And so just those opportunities to actually make that a radically simpler process. And simple doesn't just mean each page on that, the application flow being simple, really taking that total journey of saying, how do we make the path to getting a submitted application in? How do we think at the path to settlement? And then also, how do we make sure that, that's also delivering great portfolio at the other end? And so components like how do you use data aggregation to make some of the challenges around things like finance really become an important part of that. But building on sort of simple, I think the savings part is really just making it clear to consumers just the financial opportunity in play. And unfortunately, we are in a mode where many consumers don't necessarily fully, they can underappreciate the savings opportunities of differences in percentage rates. And when we have consumers in testing, talk about a 0.5% difference in rates between two lenders saying, oh, that feels really small. And it's only when you actually turn that into a real dollars out of your pocket that people coming through. So I think making the benefit side, so, ultimately, this is about desire minus friction, actually getting the desire side to say, getting a really big understanding to say, this is worth your time to actually switch, because here's what that can mean to you. That can mean years off your loan, that can mean less financial stress, that can mean so many other things. Speed is a really exciting one too. So really getting to the point, instant home loan, and you think a little bit about the opportunities to not only the process to actually input the data, but how do you think about each step towards unconditional and settlement and taking time and complexity out of the system. So rather than just a very simple online form that throws back into a legacy system where you end up with all of the pain coming a little bit later in the journey, really trying to think about the total journey for a consumer, getting to that point where you click submit at Athena, and within seconds, we've gone out to aggregate data from multiple locations. We've run over 100 business rules over the application. We're able to come back, just in that same episode to say, great, here's, you're good to go. Here's a conditional approval, or here's some things that we're going to need to talk to you about to sort of work through in terms of your application. And then I think the last one is around service. So this idea to say it's not all or nothing between a digital and a human process. So as consumers input data into the Athena app, that's visible to our service teams in real time. You're actually able to seamlessly move context to say, great, I may start on my phone. I may then put in a call. I'd like to actually have some aspects of that be explained. I may come back and complete it on a desktop later once I've had a chance to speak to a co-borrower. Roughly 20% of our applications have some kind of human connection to really help customers work through. This is in many cases complex. There's steps to go through. Of course, that's also great feedback to say, great, what were the things where that human contact was useful? All opportunities to come back and continually test, learn, optimize to make the digital part of the flow simpler over time. So I think we're actually looking in a mode where, having gone through COVID, so much of this being remote, which would have been sort of human and physical processes, consumers are ready for that switch. But at the same time, I think the experience that digital can deliver, really getting those components in place, is such a positive surprise relative to consumers whose last loan was through a branch or a banker or some of those sort of older legacy processes with all the pain and delay.
I think it's a great point about the service element. What we see in our research is customers are generally comfortable performing each individual part of an application online. They're not necessarily comfortable doing everything online, but I think they often think, if I'm doing it all online, I don't have support. And actually what we see, if we say to someone, what would make you more comfortable to go online, it's knowing that there's that support there if I need it. And increasingly customers don't want to go to branches anyway, so that support doesn't actually need to be delivered face-to-face, I think.
And the beautiful thing is that help can be on demand. It can be in context, so you don't have to start again and explain, where I'm up to. It's like, great, I'm here. This is the piece I'm not quite understanding. Help me understand what this means around, say, my self-managed super fund. Or there's often complexities in people's financial affairs where some help to really navigate through can make a big difference. Absolutely.
I think the other interesting point there that you mentioned was the components all coming together, because if you've got a more simple application, it's going to naturally be a faster application as well. And Andrew, I might throw to you, because I know Nano also competes on that, the speed element, absolutely, but also on price. Is that how you see the application experience, or all of those components combining together to create a better application for customers? Or do you think there is a component that's more important?
No, look, I agree with Nathan. It's a grab bag of all of the factors together, right? And I think that people can emphasize different parts of their business model, but ultimately the customer doesn't. If you look at all of the research, all customers value different things in different orders, and it's an individual assessment, right? Some people might be only focused on price, and that's the only thing they care about, and a good number of people are. Some people are focused on the service, some people are focused on speed. It's all individual. I mean, our view of the world is that it comes down to, and I won't rehash what Nathan said because I think he did a great job of covering pretty much the entire industry there. But look, it's predictability, certainty, time to yes, and one extra factor that we believe, which is the platform should do the lifting for the customer rather than the customer doing the lifting for themselves. So financial services is one of the few industries globally that still have the customer in the serfdom sort of mentality, going to the banker with cap in hand and then having to do all the work themselves, even though they're the ones that should be receiving the service. And I think the digital mortgage revolution is really looking at how do you reverse the lifting of the process and put that on the lender, not the borrower, right? So we think in our instance, we get to unconditional approval pretty quick. We get unconditional approvals. The fastest one was less than 10 minutes. So we massively parallel the process. We're pretty proud of the way the technology works. But the speed is just a proxy, if you think about it, for two things. It's just a proxy for unit economics and a proxy for the amount of pain that the customer goes through. So the speed is interesting and it's something we're proud of, but it's a proxy for what is the customer doing. Are they going and uploading pay slips? Are they going and getting bank statements? Are they doing all of the useless stuff that the old process requires of them, or is the platform doing it for them? And we think that's the future. And of course, if you're doing all that and the system's doing it for you, then the unit economics that you've got in your business are far lower, and those unit economics ultimately flow through your P&L, ultimately flow through to your funding costs, and that benefit gets passed back to the customer. I think that's pretty much all I could add on top of what Nathan said.
Yeah, I think that what we see in our data is the uploading of documents is still, sorry, lights just turned off on me. I'll start that question again. What we see in our research is definitely that the uploading of documents is a key pain point for customers going through an application process. So I think that's a really key one that really needs to be solved. And I know we'll come on to CDR in a moment as well. One other question I might just ask you, Andrew, before I move on is, you spoke about the speed to approval being really quick. Can it be too quick for a customer? Do you think customers want, is there any sort of nervousness from a customer if it's happening too quickly, or do you think it can't be quick enough?
Look, it depends. I'm going to keep coming back to it depends on the customer and sound like a bit of a broken record. But if you break your customer cohorts down into that innovation adoption framework, which everyone here will be pretty familiar with, the early adopters and the early movers, frankly, the faster it is, the better it is for them. And then as you go up that adoption curve, people take more time to get comfortable with automation and technology. And that's just how this plays out. But look, we're seeing, to jump probably to another question, unfortunately, we're just seeing a massive accelerated adoption and people becoming comfortable with digital journeys, right? And in fact, it's now it's no longer up for debate whether it's the channel of choice for most customers. It just is. And so, you know, the answer is no, but it's an individual assessment.
Absolutely. Anthony, I can see you nodding your head there. I guess given TikTok has been around for quite a while as well, what is it that has sort of evolved over time, and to what extent do you agree with what Nathan and Andrew have said? Is there anything that you've maybe learned throughout the journey that that has maybe changed as the market has shifted?
Yeah, well, I mean, Kate, the first thing is, you know, when we launched, the first thing we had to address was actually validation of the market and prove what was possible and create that customer experience differential. And the other thing with going first is that you not only had less appetite for the pure digital proposition, but you also had to solve all the problems yourself because they hadn't been solved before. So there's a number of benefits that have materialized for TikTok as a result of going first. But, you know, I fundamentally agree. We're at a point where you could see digital as a channel for home loans going from 3 to 6% of the market to 30% of the market in like 3 years. So, you know, the unique thing about the businesses on this call is we're extremely well placed to drive that customer demand and also benefit from that customer demand. And the thing that will happen is as our businesses scale with the level of automation that sits in them, is that we'll be able to pass on more and more of the benefit to the customer of that efficiency. And we'll continue to, our data pools get bigger, our enrichment gets stronger, our automation gets even better, and the costs come out even further. And so it's a really, really exciting time. And, you know, I must say the team at TikTok are really enjoying this market transition because we live the hard yards of trying to create a market to some degree. And I think, you know, if we're all in the game of creating better customer outcomes, we're all in the game of lending responsibly, we're all in the game of sustainability. And it's actually just really an exciting time, and an exciting time for the Australian consumer because it's so easy. And so, you know, that is what I'd just add to that, because we've covered a lot of the how. I will just say one other thing. The point Nathan made about the digital experience being two-way, so that the people within TikTok, and I'm sure it's the same at Nano and Athena, are absolutely empowered to create great customer service when the customer needs that service, because they just have really good digital technology and tools at their disposal to serve the customer. And that is, I think, equally important. And I think it's at that level of investment to create that is probably what differentiates businesses like ours to just those that are trying to play with just a website and data capture, and then actually try and I guess run a less holistic fulfillment platform that is truly digital two-way. So I think, you know, that would be the last thing I add.
And Tim, what are your thoughts on creating a good digital experience, and how does platform and technology really feed into that and making sure that the customer is getting the best experience they can and also getting the support that they need as they go through that application?
Yeah, I think, you know, between Nathan, Andrew and Andrew, they covered a lot of it, but I think back to the 3 points I think you mentioned at the beginning in terms of speed, security and customer experience, that's the key themes that we see throughout our customer base. And when we're looking at organizations trying to review their customer journey, trying to streamline that, taking more data points in to, again, make that a more seamless process. That is definitely what we're seeing with our broader customer base, both locally and globally. I think, you know, in terms of for some consumers, I went through a mortgage application recently in the UK, ironically, and it was the most painful process in the world. I had to personally upload 28 documents of bank statements to a particular broker in the UK, and it was one of the most painful experience ever. So I think in terms of going through that process, I think, aggregating bank transaction data, uploading documentation, using OCR technology, I think, during the pandemic, people now are much more, their ability to execute on that is, I think we've come a very long way in a very short period of time in terms of, people like Tic Toc obviously been going, doing this well before that. But I think, the average person on the street now, if you compare to where they were 2-3 years ago, they're probably much more advanced in terms of their thinking and would I do that? So I think we've come a long way, but I think still, got some to go in terms of the average probably consumer.
Okay, can I add one comment to that we haven't covered, but I think it's quite important in the context of all three of our businesses. One of the great advantages that we've all got is when we all set these businesses up, we started with a blank sheet of paper, and we reimagined the whole process and the customer experience unencumbered by a 40-year-old COBOL back end, right? And so, it's a really important point, because if you think about the fight that's going on right now, when you're a company that can run a modern technology stack, start unencumbered by 3 decades of technical debt, and 30,000 compliance people that are telling you all the things you can't do rather than the customer experience you want to build, it changes the outcome quite fundamentally. And all three of our businesses, I think, are good examples of when you can do that and you can put the customer first and reimagine with a blank sheet of paper. This is what you get, and this is why it's such an exciting time for us in this industry, because we're designed around what the customers want, and we were unencumbered in that.
I think as well, customer expectations are changing. We talk a lot about the fact that customers aren't just comparing, one bank to another anymore, though they're definitely doing that as well. They're looking at how quickly and easily they're doing other things online and thinking, why is my mortgage so difficult? And what comes through in our research quite a lot is customers saying, I just don't understand why you're asking me for this information that you already have on me. Why am I uploading pay slips? My pay is deposited into an account with you. So I think customer expectations are changing quite quickly as well. The other question I had for you all around digital experience is what are the challenges to overcome? And Anthony, I might start with you. As you said, you really the first to go into the market. I'm assuming there's a lot of challenges you've had to overcome throughout the Tic Toc journey.
Yeah, I mean, and the first challenge was we had an absolute commitment to have no asterisks anywhere in our customer interactions, including our website, right? So first challenge was we were actually funded by a bank primarily, who we have a partnership with, Bendigo and Adelaide Bank, who had provided us a $25 billion funding commitment over the next 7 years. And so, the first challenge was actually bringing a fintech platform that was very passionate about having a broad and holistic product set that we have, but with the transparency and commitment for that to be provided to the customer in a modern way that was plain and simple English. The industry's hidden for a long time around complexity to protect profitability, defend itself from poor consumer practice and not putting the customer first. And we really wanted to break that down. So we started there. Then, of course, we had to solve all the data and technology challenges. And then we had to, create a market in some respects. So, they're really the challenges that we've overcome. What we're doing now is we're right in the point Andrew made about legacy technology is even real for a business like this. We're right in the heart of the whole second generation of our platform. Our first 2 modules are built. They're the modules that are being purchased in the market. So, we're really on that journey. So the innovation cannot stop. The innovation must absolutely continue. And And, you know, that's really, and keeping that culture, even as you scale. You know, we have over 100 people now. We've signed the lease on the next floor here. We're going to fill that as well. You know, the reality is that that requires making sure that your culture keeps you where you were in terms of that commitment to the customer, the commitment to innovation. And we're really, really passionate about those things, because culture is ultimately the only scalable thing. And so we will endeavour to do that.
My sense, Nathan, is that Athena also really agrees with that idea of making things very transparent for the customer. Was that one of the key things that you were looking to overcome in terms of the challenge, and what were the other challenges that you were looking to solve for customers?
Yeah, no, I thought that Anthony made some great points there. Probably three things I would add. I mean, probably the first one is not just using technology to replicate all of the legacy industry conventions. So really, when you're starting to define the product you're delivering, to actually being quite thoughtful about where you want to break away. So being the first lender in market to be, you know, not charging you know, a loyalty penalty to consumers, trying to think about how we can use things like pricing to really incentivize and drive the behavior towards positive outcomes like pay down your home loan faster. There's many opportunities for businesses like these to really not just think about technology as just being about efficiency, but actually about being very creative. And so I think that's the first challenge, is to think big and to listen carefully to really where challenge to convention is required. I think the second dimension is of course getting the balance between speed and scalability, and then ultimately the portfolio quality the other end. And so I think the last 2 years of COVID have been a really important proof point, just showing the exceptional credit quality that you can achieve. So digital processes can actually lead to outcomes with responsible lending credit quality that are actually better than legacy processes. And so I think that's a really important component, because in the end, we're double-sided businesses. We have to think a little bit about how do we make, you know, the lives of our borrowers better, but, you know, clearly getting to that virtuous cycle where you're delivering exceptional portfolio quality, being rewarded with lower funding costs, which you can then pass back as to better rates to borrowers as well. So that's the second one. And then the third one, I think, around innovation is just being relentless. This idea that innovation is not just one cartoonish light bulb above someone's head, but it is extras add up. It's 1,000 details that you need to work through. So it's getting teams that can move at speed to identify where we need to test, learn, iterate, being brave around experiments, and then getting that alignment between policy, platform, process, people, because I 100% agreed with Andrew's point earlier around the challenges of legacy in terms of tech, but actually it's often policy in some of those other dimensions of how do you actually get those things working together in a way that it's actually providing great outcomes on credit and compliance, but ultimately achieving that through mechanisms that are actually leading to very different experiences for consumers, and clearly an advantage in terms of driving growth as well. So, you know, that's the fun and joy of it. And I think what's great is when you get that machine humming, just that level of excitement in teams around, you know, what can be delivered when you start to think about, you know, innovation cycles not measured in quarters or even worse in some of the legacy players, but, you know, really what does each fortnight look like in terms of what's the delivered benefits to consumers.
And Andrew is, I guess, the newcomer to the market. How different are the challenges that you've faced in launching Nano?
Oh, they're all spookily the same, right? Probably the only 2 points I'd pick up. For us, we set out on this journey of we wanted to make sure that we built a full bank replacement product. And so for us, it was the application, the onboarding journey was important, but when you landed, you needed to have a fully featured app, you needed to have payments capability, you needed to have a sub-offset account, you needed to have all the features so that if you're in a net debt position, you can actually use the product in its entirety to run your whole life. And that, you know, I wasn't great before we started down that track, but, you know, it turns out that's actually reasonably difficult to do. And there's the industry, Anthony made a really good point before, it's set up with opacity and complexity to protect economics and legacy businesses. But a whole lot of the processes and the pipes and lines and wires of the industry function the same way. And so to actually build a fully featured product is very, very difficult from the ground up in a highly regulated industry. And then so picking up on what Nathan said, look, the processes and the thinking of legacy companies also quite fascinating. So in our in our process, we do the VOI, the verification of identity, last. But if you think most banks and financial institutions, they do it first. And so we reversed it because we had lots of debates internally, and the whole principle was, and this is when I was one of the big four banks, that's how all our products were built. And we said to ourselves, well, why do we need to verify someone's identity if we're not going to approve them for a loan? It's just, why would you put that friction at the start of the process and ask a customer to go through that, to then go through a process of application, to then be told that they might not get a loan? So we reversed it. But I can tell you that months of debate around how you can think about policies, processes, and flows. You get good outcomes at the end, but you've got to change the thinking. And Nathan was dead right. It's not just the technology. It's just a fundamentally different way of thinking about how the customer wants to interact. That's important.
That's a really interesting one, the idea of putting the identity verification at the end. It makes intuitive sense from a customer perspective. That's you don't need to do that at the front. You want the information first. But yeah, it's a different way of going through that process.
Yeah, well, think about Amazon don't make you prove that you live at the address you're going to get your book sent to before you go and browse and buy a book, right? Because it's just completely counterintuitive to what a customer experience should be. So it's just one example of dozens that we've all got of, thinking about things differently.
It's also a market research principle. You ask people those questions at the end of a survey because what you care about is the stuff in the middle. So interesting. Tim, just going back to the conversation around CDR and sort of removing friction within the application process for customers, that's probably a really great one from Andrew. We've all sort of spoken about the fact that there's pain points around uploading documentation. There's pain points that exist in the application process at the moment. Is CDR the silver bullet? Is it going to solve all of these problems, not just for the digital lenders on this panel, but for the industry? Or do we need to do more work around it?
Where to start? I mean, it's a step in the right direction. I think is probably it's a good point to start from. I think as the broader CDR regime in Australia, it's starting to pick up momentum now. We've seen some new rules come out from the government to allow organisations to access CDR data, reducing some barriers to entry and some cost from an accreditation to utilise data from a digital lender or financial wellness perspective. That's finally starting to pick up momentum, which is good, but I think we've got a lot more to do. I think, is it going to be fully the silver bullet? Partially. I think, you're not going to get 100% of data you need from, in a certain point of time through CDR. Envestnet, Yodlee, we've been doing this for over 12 years in Australia, 20 years globally, and, 750 clients through this. How we see it, it's going to be a hybrid solution. From the get-go, it isn't going to be being able to provide that seamless application flow through that. I think to the end consumer on the high street, they don't really care what open banking is. They don't really know. And what do they want? They want to get that mortgage. They want to get that personal loan. And how do they then do that? Is by having control of their own data in a secure manner, to be able to get a better seamless experience. If it's through a lender directly, or it could be through a comparison site, for example. So I think there's some way to go in the regime, and that's a very, very long conversation. But I think it's most definitely a step in the right direction. But I still think there's going to be some challenges. I don't know. Anthony's probably got a strong view as well.
Because I talked to Tim about this. It's absolutely is a step in the right direction. The point I would make, and I think it'll be consistent in all three of the home loan lenders on this panel, is it's actually access to the data is one step. It's actually what you do with it that matters. So it's the enrichment and automation that drives the customer experience, the efficiency, the digital experience being two ways. So the silver bullet of CDR is another way, and a good way, done well, to access the data. The rest of what needs to happen from that point doesn't actually change. And it's I think where if you're at Tic Toc, that's where our passion lies. What data can we get? and then what can we do with it in terms of using it to benefit the customer.
Yeah, well, and isn't guys, correct me if I'm wrong, but isn't the one of the main issues with CDR at the moment the joint application piece? So at the moment it's not spec for joint applicants, which is 70 to 75% of the mortgage market. So the customer experience is hindered by the construction of the legal framework, as I understand the issue. So if you've got, as I said, 70% of the market are joint applicants and the pipes don't allow for joint applicant data ingestion, then isn't that the main problem with the customer friction with that new pipe? Feels like it.
So I totally agree with Andrew. That's a problem. Where I'd frame this is it's really important this is done right, and so
yes.
Problems like joint applicants, but also the comprehensiveness of data, the quality of the data sets, all of these things need to get sorted through. Yep. If ultimately CDR does not lead to a very different mortgage experience, it has failed as a process, right? This is the place where the rubber hits the road for a broad part of Australia, actually making material differences to their life. And so I think that's where, unfortunately, there are always going to be incentives to those who have the data to want to put up barriers to make that a little bit more complex. The joint account thing is completely unnecessary that it's been as complex as it is. That should have been a very simple piece to solve. And so I think, the risk is you do end up, with scenarios like UK where all this great work did not necessarily translate into benefits to consumers at the rate that they would be. And so I think, this is one of those pieces where the regulator does need to set some goals to say, how easy does it need to be? How comprehensive does the data need to be? What is the uptake? What's the education? So we can go from this world where, one of the hardest part of the application process is giving trusted, verified, quality financial information across your full financial affairs. That should be a very simple process to step through. And so I think that's the challenge we throw out to say that will be step by step, and there's always going to be learnings on the way. If it doesn't work in this category, it has failed. That's just the very simple call out we'd make.
Hear.
I think whenever we look at our research, to your point, Tim, customers on the street do not know what open banking is, do not care. They don't want to give up their data because we've been trained to not want to do that and to be nervous about giving up access. But when you say to them, would you want a simpler, easier mortgage application? The answer is, of course, yes. But maybe there's also a point here that the lenders on this panel have been able to create a more simple application process without CDR. So I think to your point, it's not just the data, it's how you use it.
And I think Tim's absolutely right that it is that hybrid approach where, using CDR rails for everything that's available and then recognizing there'll be other data aggregation techniques to come through. And then again, Anthony's point about then saying, what do you then do to make the experience of then translating and gaining the insights from that data in a way that's actually going to help with the application. So absolutely a step in the right direction. I think we just want to throw out the challenge that needs to go a lot further than where the sort of status quo is now.
And to that, we've seen a lot in the UK as well, across Envestnet, Yodlee, where a number of fintechs and digital lenders were powering there, they're trying to make that seamless more to move that particular mortgage. If you've got a mortgage with a Big Four bank in the UK, for example, and how to do that, how that CDR data, but again, has holes in it. For example, it doesn't access your pension data, it doesn't access your certain investment container. So there are gaps in the data framework there, not only in Australia, but then in the UK. But I think, that we're certainly lobbying pretty hard right now with the ACCC in terms of pushing that along. But I think it's definitely a hybrid model at the moment.
I'll finish up with a couple of final questions, talking a little bit more maybe around the future of the digital channel and I guess the future of the digital mortgage space. One question I'd be very keen to get your thoughts on. I know that when we look at the different types of borrowers who are more comfortable with a digital application, there's definitely a skew towards more savvy borrowers. And I know that there's been really a focus for some of these providers on refinances. Do you think that the digital channel is always going to skew towards a certain type of customer? Or do you think as the market evolves, as consumer sentiment and preference evolves, are we going to have first-time buyers are probably a good example. Are we going to see first-time buyers becoming more comfortable using digital? Or is there always, maybe to your point, Andrew, before, different customers are going to have different needs? And Andrew, why don't we start with you on that point?
Is that me?
Yeah.
Sorry, I cut out. Look, I think my personal view is we're on that innovation curve. It is mainstreaming, frankly, real time in front of our eyes. And we've got to remember, I think, look, a digital origination journey or a digital mortgage in this context is an enabler of a customer buying a property, or refinancing a mortgage. It's, people don't get out of bed and say, hey, I really want a mortgage. They get out of bed and say, I really want a house. And the mortgage is the thing I need to get to the house. And the digital journeys will become more fulsome over time. The product sets will widen. The customers will accept them more for different circumstances. It will go across all segments. It's almost an inevitability that that's the way this market matures. I disagree with Anthony in a point that he made really early on, which is I'll just pick up this market moving from small to around $100 billion over the next 3 years. 3 to 5 years. I think it's going to be much, much faster, right? An annual flow. I certainly agree, but I think it's going to be faster, mate. I think we're going to see the digital flow and the swing to digital happen rapidly over the next 12 to 18 months. Because our companies are growing so quickly and the proposition is so strong for all of us, it's just going to happen much faster.
Yeah,
in my opinion.
Yeah, no. So just I said 30% up to 30% potentially in 3 years.
Yeah, I think, Matt, I agree. We're going to get there. I think it's going to be faster. I think we're saying the same thing. It's just happening so quick in front of our eyes, right?
It's pretty quick. It's a big market. Nathan's point.
Yeah, absolutely. But I'll be really interested in Anthony's view on this because he's really the leader in this space and he's been innovating ahead of the rest of us. I'll be really interested in your opinion, mate, on what you see.
Yeah, the customers changed. When we launched, our customers either worked in finance or technology. Their average income was like $180,000 a year as a household. And they were actually very late 30s to early 40s. And that was the cohort. And that thematic came up earlier, but that was a statistic. Our customer base today is 60% refinance, 40% purchase. Of the purchase customers, 35% are first home buyers. So to the point Andrew just made, there's the swing in the channel. So in terms of quantum of customer cohort breadth that is engaged with a digital home loan proposition. The other thing that, we now have that we didn't have day one is, we now can lend up to 95%, including capitalized LMI. We do full approval prior to purchase, subject only to property, and we give people customized fulfillment journeys that facilitate that. So it's very much, as we innovate, and we've talked a lot about innovation, we're broadening our product set to the whole of market. I agree we're all doing it in a way where we're lending really responsibly. Our asset quality is evidencing that. But, really we are, I'd expect you give it the timeframes we're talking as to get to that market share will be pretty much full product proposition as lenders holistically. So, there's sort of the stats we've seen in terms of that evolution. And, to us, obviously that's really exciting.
I could just jump in as well. So look, I think Anthony and Andrew, I totally agree with your points. Maybe just a couple of other things to add. So totally agree that in some ways refi is the simpler scenario. So that has been the largest share, but completely agree that as you build journeys that are really targeted for the needs of people at different stages of that journey, as they kind of go from browse and bid, buy, how do you actually support consumers through each of those? Purchase will end up being moving to digital as well. And so probably the thing I would call out is digitization is actually going to impact not only those customers who are choosing to go direct, so sort of really the end of branch and some of those sort of legacy channels being credible, but equally really changing and making life better for those who do choose to get advice as well. I mean, the same underlying problems of saying, how do I make it much, much easier to choose the product that's suitable for me and understand my needs, to go through and gather all those finances? There's opportunities to really take and use the same digital toolkit to make the life of a broker and the service that they can provide to their customers that much better again. I mean, being in a world today where brokers have to often wait for 10, 20, 30 days to get to an unconditional approval, I mean, that is just ripe for disruption in the same way. So sort of think a little bit, coming back to your sort of opening question, Kate, about what segments. I think the desire to make it simpler, to get the savings, to get to speed, they're all things that actually cross across segments. The decision, would I like advice to help me through this journey? Am I someone who wants to go and get this done for my, I mean, they're different segments will have different preferences. And then completely agree that with Anthony's point that, you know, people have started in digital with some of the simpler segments, but that, you know, addressable market is broadening out quite a lot. So I think this is actually very easy to underappreciate just how broad that disruption will be. But, you know, still with brokers being a critical, important segment, lots of consumers are going to value that advice. But under the hood, actually having something that makes that whole application and origination journey much, much simpler, almost independently of whether you're going direct or getting someone to really help you through the process.
And that very neatly leads me on to my final question, which is on brokers. And one of the questions that I get asked a lot, especially when I present to our clients around digital applications and the way the market's moving, is digital direct going to replace brokers? We've seen such massive growth in the broker channel over the last few years. And Nathan, maybe your point there is that these channels actually work together, whereas we often think of them as competing channels. But very keen to get the thoughts of all of you on where you think digital is going to sit relative to broker, and does it undermine the broker channel longer term?
So I'll maybe just briefly comment, given I just came, but yeah, absolutely. I think that you know, digital does not replace broker. I think they're on, to some extent, two quite separate needs. But how does digital power a better broker experience? Is that real question? I think there will be people in simpler scenarios who maybe would have gone, you know, to a broker to hide the mess, to have someone on my side to sort of get to a good price, where price is actually clear and easily to access, where the core process is simple. There'll be some of those scenarios where there might be some switching between channels, but the core of it is, you know, this is a really critical decision for a large number of consumers, and, you know, getting advice, particularly in some of the more complex scenarios, there's going to be lots of consumers where, you know, the value of what that broker channel provides. So I think, you know, this is definitely a mode where you're seeing sort of the banker and branch move at real speed towards digital, but I think it's a much more nuanced story around how digital and the broker channels sit side by side and how that evolves over time. Broker is going to remain a really, really large channel in mortgages.
Just from Yodlee's side, Envestnet Yodlee from the other side, I mean, we see that in terms of demand for services. So not only for the, you know, the direct, you know, on balance sheet lenders, but also the brokers in terms of, you know, using that data aggregation, both CDR and non-CDR data. So in line with, you know, Nathan's point, we're seeing, you know, as look where we were 2-3 years ago for organizations to, you know, use these data mechanisms, we're definitely seeing huge, that demand is only continuing and most, you know, increasing significantly in the last 12-18 months.
Anthony, anything to add on thoughts around where?
I agree with Nathan. There's different levels of financial literacy. There's different levels of financial confidence. There's a big role for brokers. The opportunity is to provide them the same technologies that enable the customer experiences that the digital self-serving customer cohort are now enjoying.
Andrew, anything you would add or disagree or agree with?
Completely agree with all the guys on broker. Important channel will continue to be. I'll make one final point on this topic, which is the people that should be worried here are the lenders who have got time to yes of 2 to 3 weeks, and because that's all they can manage. The lenders who have got opacity in their pricing by design so they can protect their legacy back books to the detriment of their customers, and the lenders out there whose service standards overall are encumbered by old systems, and they don't treat people the way that people expect to be treated in today's world. Those are the lenders and the participants in the industry that should be worried, because that's where the share is going to come from.
I think what I've taken from this conversation today is everything is changing, everything's in flux, the industry is changing, customer expectations are changing, and we really can't get away from just how important speed is in the application journey at the moment. Thank you all so much for your time today. I've had a really great time talking to you all, really great points and great insights. So thank you for your time.
Thanks, Kate.
Thank you. Thanks, Kate. See you, everyone. Bye-bye.
See you guys. Bye now. Thanks, Kate.
Thank you.